Hi, this is Mike Swanson, WallStreetWindow.com. I'm speaking with David Skarica, runs the website addictedtoprofits.net. How you doing today, Dave?
Good, Mike. How you doing?
Oh, I'm doing good. It's been an interesting week in the markets. As we get into the coming week, one thing that's caught my attention is the emerging markets ETF, EEM, because it broke down in June after that Fed meeting. We just had a Fed meeting last week, and it looks to me like it could roll over and start to fall again. It bounced in September, but it's overbought on the stochastics. It's at a trend line resistance, and if it were to fall to 42 or something, it would give a sell signal. So that's something I think could be weak into the end of the year, no matter what the U.S. stock market ends up doing. What are you looking at? What's got your attention?
Well, like in terms of the emerging markets and what you're talking about is what I think is kind of interesting in that is that if you look at let's forget the technicals, the fundamental backdrop. What happened in the last 9 years, when we had this ZIRP policy, zero interest rates in the States and all over the world and in Western world, is that all of a sudden these emerging markets, which, have higher yields because they're higher risk, and a lot of the bonds are issued in U.S. dollars, it gave people incentive to go buy them because you could go buy a bond of, a company in Turkey or Brazil or wherever it may be and get 6-7% instead of like 0% on a short-term treasury and only like take 2% on a long-term treasury. Because if you go look at the 10-year bond, for the longest time, the U.S. 10-year bond was just trading around, it's up to 3 now, was around, 1.5 to 2%. So that created a lot of inflow of cash into those things. Well, now what we're seeing is kind of the reverse, outflow of that, right? We're seeing we're seeing the emerging markets, the money flow out of those emerging markets, and a lot of the currencies and bonds of these corporates fall. And it's really simple. It's now they know that they've got short-term interest rates at around 2.25%, and long-term rates are over 3%. There's less incentive to buy those, and you're seeing money move out of those markets. So what I'm trying to say is, as long as these interest rates in the U.S. continue to kind of creep up, there's more likely you're going to get an emerging market crisis. And the way that these countries funded issuing all this debt is really what's called a current account deficit, which in layman's terms, or simply put, is basically more money coming into the country than leaving the country, or like you say, more coming in to fund the deficit and the difference of the money going in to going out. And the problem is, when that money again kind of leaves and that current account deficit explodes even more, then the currency usually has to decline to try to attract more capital to again close that deficit, right? So that's the kind of problem, and I think this will continue. And you're going to have little respites, and you're going to have rallies once in a while. Argentina just got a revamped IMF loan, which kind of helps them in the short term. So you're going to see these things bounce. But I think that as long as the U.S. continues to raise rates, you're going to see real pressure on these emerging markets. And remember, in 1997, the U.S. raised rates earlier that year, and then when the emerging market crisis happened later that year, and then again in 98, it actually caused the U.S. to stop raising rates and even cut them in 1998. So at some point, if this gets out of control and starts to trickle over, we could see, the Federal Reserve kind of reverse course because of this liquidity pressure. And actually, the one market I think to look at, because everyone's talking about Turkey or Argentina, because those are the two that's kind of been the weakest. You have to watch India. If you go look at the IFN, which is the India Fund, or TTM, which is Tata Motors, a stock I've traded in the past, these things are down huge in the last 6 to 12 months. Tata Motors, I think a couple of years ago, had a top at over $50 a share. It's now trading at like $15 a share. So these, that's a large automaker. They own Jaguar and Land Rover. So I think that as that continues, India is one to really, really watch, because a financial company there recently had a big default on a loan. I think they have a lot of bad loans in India, because, you have these small micro loans that are pretty unregulated in that country. So that's what I would really watch, because India, I think, is about the 6th largest economy in the world. And almost every economist will tell you that in 30 years, India is going to be the 2nd largest economy in the world to China. So a big shake up there would probably something that's pretty bad for the global economy and global markets, and not just like a smaller economy. Even though Argentina and Turkey are in the top 20 economies in the world, they're nowhere near the size or scope of India.
Well, inside the U.S., we saw a wild swing, of course, in Tesla. It looks like Elon Musk is in big trouble. What do you think he'll get out of this one?
Well, no. I think this is kind of the end game for him. Like the real problem, what's going on at Tesla is, look, I actually did a podcast this morning, which I'm about to upload to my member section. I think you're dealing with, like, really someone who has probably some sort of psychological issues. The thing about, we know this from the stock business, we do stuff in small cap deals. This business, because, people, it is kind of fast paced and people can make money quickly. It does tend to attract people who are sociopaths or psychopaths or whatever you want to call them, and people who are maybe pathological liars. And I think that's what we're seeing from him. Now, I don't know if he was always this way, but I definitely think that if he was, it's getting worse with the more amount of money that he made, etc. And one thing I noticed about these type of people and individuals is, despite the fact that Musk is seen as some big thinker, we're all going to be flying to Mars or flying into the sun or whatever the hell he wants to do, and hyperloops and all this stuff. What I find is they're actually the exact opposite. They're very short-term oriented people. Usually they've got some kind of addiction problem, and they're just getting drunk all the time or doing drugs, and they're also just thinking day to day. And I think if you go look at Musk, what he's really doing, despite the fact that he says, again, he's going to Mars and hyperloops and solar roofs, what he's really doing is actually just kind of going day to day. And because his company's in such bad financial shape, I'll give you a quick overview of the numbers. This is really simple. They're burning through $700 million a quarter, right? They had, as of the end of last quarter, they had $2.2 billion on the books, okay, in cash. Well, that would tell you by the end of the first quarter they're going to be out of cash, and on top of that, they have to roll over $1.1 billion in convertible debt by the end of the first quarter, which means that they're negative $1.1 billion cash. Either they have to roll over that debt into another convertible, or just pay it back. And the problem with that debt is it's convertible at $357 a share. And of course, now the stock is almost $100 lower than that after today's close. I think about $90 lower than that. And here's the problem. When he did his 420 tweet, again, this is a short-term orientated thing. There are some rumors he was on some kind of drugs, like he was on acid, maybe. Right, which is crazy to think that. And then there's a rumor that he used the 420 things, that's the marijuana thing, and he was impressed trying to, the SEC saying this in the charges, by the way, that he was trying to impress his girlfriend. So this is not just some crazy talk. This is something that the SEC is actually saying in their charges of it. Again, that was a short-term orientated thing, and forget about impressing the girlfriend. What I think he's really trying to do is burn the shorts, because Tesla has a huge short position, trying to prop that stock over 357 to get all those convertibles switched into equity, and then he doesn't have to pay back that $1.1 billion. So again, this is to my point. This thing with ramping up the car production, everything he's doing is just trying to get rid and pump the stock above the 357 and get rid of that 1.1 billion. So there's actually no forward thinking or far off thinking as well. It's just this thing trying to get rid of that debt so he can keep the company solvent. And I think that he is a pathological liar who will say anything to keep the stock kind of propped up above it. Now, these are my opinions. Obviously I'm not a shrink. But it's just like his behavioral patterns. And again, I've dealt with people who are who are not the nicest people in junior mining, who have, unfortunately, I learned from these kind of people by them ripping me off. And I just see this kind of similar behavioral pattern with him. And the difference with him, though, is he's being ultra successful and becoming a billionaire. He's also created this kind of cult following at the same time.
Well, he's being charged with the SEC for making false and misleading statements in what could prove to be the biggest individual stock manipulation in history in terms of market cap it's
Well, if
something
you think
else.
about it this way, when you watch that, I don't know if you ever seen the movie Gold with Matthew McConaughey, which is
Yeah, I
kind of
saw it. It was good.
yeah, it was good. Yeah, actually, I think it's really good, especially their research on this stuff that went on in Indonesia. That's really kind of how it went down, for Briex. But what I'm trying to say is Briex was 6 billion Canadian at the time, right? And even adjusted for inflation, that's 20 years ago, maybe that's 12 billion in today's dollars, and that's Canadian, so that makes it 9 billion US, roughly. The Tesla was 60 billion at the top. And by the way, that's the catch-22 in Tesla. That a lot of what's in the stock is because you've got this cult premium where they think Musk is some kind of revolutionary, changing the world. And essentially, even if he has to step down, a lot of people have said this, no, this is a $50 stock, because then the valuation has to trade more like a normal car company. And by the way, if you look at all these other things they've done too, and this is why I think he won't step down, because all of this will be exposed, by an independent board if he did. And this is why he didn't do the deal with the SEC to step down for a couple years. For example, when they took over Solar City, if you go look at the revenues, the amount of revenues they're generating from the solar part of the business, it has completely collapsed since they took over Solar City. So they obviously did that takeover knowing that part of the business was going to tank, and they just did that. And Solar City had a ton of debt, by the way, and they just basically did that because he took over his sister company, which is essentially going to be a failing company.
Well, have there been any other style? I mean, this has been the news story, overshadowed. We'll talk about the politics, but if the politics wasn't happening, this would have been the news story of CNBC on Thursday and Friday, that's for sure. But other stocks are making moves too. So has anything else caught your attention?
Yeah, we had something interesting happen, and again, I just did a podcast like this. I'm actually going to, if you go to addictedtoprofits.net, I'm going to upload this podcast to the front page this weekend. And it kind of, instead of just talking about all these market things and macro things, I was like talking about a small stock that both you and I participated in a private placement in a few years ago, and it kind of proves why we do these things. It's called Wallbridge. It trades as WM on Toronto. And so essentially what happened with Mike and I is, this stock was trading at 8 cents. We did 8-cent financing. There was a 10-cent warrant. I also got some broker warrants, which are part of the finder's fee of raising money for them. And the broker warrants were at 8 cents. And anyhow, this stock had some great drill results. Eric Sprott put in a bunch of money into this company, I think over $3 million at a higher price financing. The stock shot up to over 30 cents. It's about close to around 21 today. So what it is these broker warrants that Mike and I bought or some broker warrants, but these warrants with, some at 8, some at 10, are now more than double their money. So right now, I've just exercised my warrants in it, and I'll probably, take some money off the table because it has shot up. But that's why we do these things, because the great thing about these warrants, you have 2 or 3 years for the stock to move. You can always just sell the stock, put your money somewhere else, or like say you still own the stock, you can just sell a little bit into the market, then raise those funds, turn around, buy the broker warrants or regular warrants, and then exercise them, and then you have more stock. Let me give you a quick way it could work math-wise. I'll just use Wallbridge as an example. You got 8-cent stock and you got 10-cent warrants. Let's just say you bought 100,000 shares, just to make this easy, right? The 100,000 shares at 8 cents cost you $8,000. Well, to exercise those warrants, if the stock is above 10, would cost $10,000. So that's $18,000 total. But say the stock, when it runs to 20, like it has. Well, you turn around, you can sell those 100,000 shares, or sell enough to exercise the warrants. That'd be 12,000. So at 20 cents, you got to sell 60,000 shares of your 100,000. Still 40,000 shares left. You turn around, you exercise those warrants, right at 10, then boom, all of a sudden you own 140,000 shares at 20 cents, which is, I'm sorry, I'm just doing my quick math here. I think it's about $30,000, right? And your 10 grand has become 30 grand, and you've never even used additional money. So the stock basically, long story short, the stock has doubled, but you have more than tripled your money. So that's kind of how these things work. And by the way, just so you know, it's not BS, that about 7 years ago, I had a stock called Tinka, was traded, it still trades, but then the ticker is TK. They have a deposit in Peru. And this stock went from 10 to 50 cents, and I owned the stock, the placement at 10 with warrants at 15. And after I exercised the warrants, I had made about $100,000 on that 10 grand investment. And I essentially used that money for the down payment on my house. So, that stock basically helped buy my house. So that's kind of how these things can work and the leverage you get. So you can either sell the stock, keep the warrants, and the stock goes up. You can exercise the warrants. Or if you keep the stock, the gain you have in the stock, you just have to take some of that money off the table to exercise the warrants. And it's like you don't have to put any new money to work. So it's just like really unique concept. And remember, Wallbridge has happened in a terrible market. Gold's still under 1,200. Most of these resource stocks are dead right now. But, what really can work is when the gold market takes off, because then you're going to have more deals doing well, more stocks reacting to good drill results, et cetera, et cetera. And the reason that this is kind of specific to mining, even though you can buy obviously placements in non-mining companies, is because mining is capital intensive. And, these companies have to raise money to drill. Actually, to go back to the movie Gold, my favorite scene in the movie, actually, because, I participate in a lot of private placements, is when they're in the bar and the guy's just starting the drill program, and they're all just trying to scrum together a couple $100,000. I think they end up raising like $260,000 from the bar, calling all the contacts they know and investors they know. And that, anyhow, the idea is, they need money for the equipment to drill. There's no cash flows in an exploration deal, so that's how they fund themselves. So this kind of venture capital, is really kind of exclusive to junior mining as well.
Yeah, just so people know, I bought a private placement in, and I think it was either 8 cents or 7 cents for the shares of stock, but the warrants I got, they were for 10 cents, and as you explained, a warrant is like a long-term option. So I sold the stock a year or two ago, but I still have the warrants, and right now, hope the stock, it shot up like you said, but appears like it's going to try to, pause here, consolidate around this 20-cent level. So it'd be interesting to see what the chart looks like.
And again, in a good market, we had to wait a couple of years on Wallbridge because, and it's had some good results over the last few years. It's just that the gold market is so dead, it didn't really react to this last round of excellent results. Like they were getting over 100 over 100 grams per ton, over a certain amount of, over 4 or 5 meters, stuff like this on their results. And this is really great stuff. So like that's the thing. They needed really excellent results and took years. But when I bought that Tinka stock, I think I bought it in 2010, and it took like 6 months or something for it to really take off. Because, in 2010, 2011, you were in a great market for resource stocks. So that's the thing, too. Mike and I bought one way back when called Paramount Gold and Silver. It actually still trades under PZG on New York. And this ended up being a huge silver deposit that Coeur d'Alene took over. And this stock, we bought the seed financing at 5 cents, and the thing went to $4. Okay, so now we didn't hold it the whole way up, but that's just an example of what these things can do. And by the way, that happened within like 6 months of that thing trading, going public. So it really, when you're in a hot market, that's what these things can do. And again, here's another thing. Again, I'm not saying that it's not a real business. But the thing about junior mining is you don't need some big fancy business plan. It's not like, Google was invented. Actually, the 27th of September was Google's 20th anniversary, 1998. It came in, it was invented. And by the way, it's just because the 27th of September is my birthday too. That's how I kind of noticed that when I read that. But anyhow, what I'm trying to say though is Google didn't trade, I think, until 2003 or 2004. It took 5-6 years, and you're building a business and you need all this infrastructure. With mining, all you need is some quality geologists, a good property, and, to raise a few $100,000 to, a few $1 million. You don't need a huge amount of capital to start with. So the thing about these as public entities, you can go much quicker as a public entity. Actually, when say, again, a company like Google, raises their seed capital, the idea is they're probably not going to come public in 5-6 years, for 5 or 6 years, right? Where if a mining company raises seed capital, they're probably going to want to come public within 6 to 12 months because they need access to the public markets to continue to raise capital to drill.
Yeah, no, it's going to be interesting. I hope, I plan at some point to buy into more of these type of deals too. Hopefully by the end of the year, early next year.
And in a way, here's the last thing too, is while most of these things are open to accredited investors, it's also way more democratic than, say, tech deals. Because tech deals are what? The big venture capital firms in Silicon Valley funding these things. A lot of these things have hundreds of million or billions of dollar market caps by the time they come public, and the average person can't participate in. And because again, mining companies need this capital, you can be the small guy and you can put 5 or 10 grand in a deal. A lot of them have what's called friends or family allocations, early on placements, where you just, if you know someone at the company or et cetera, you have a relationship with them, you can invest money in them. So that's another advantage of the mining deals too, is you don't have to have a huge amount of capital, or even if you're rich and you just kind of want to put in small amounts and do it almost like it's like educated gambling, right? It's like fun, right? You can do it. Whereas, if you're in some big tech deal, like if you're going to invest in Uber right now and it's still private, you're going to have to be some big venture fund who's got to throw millions of dollars at them,
Well, thanks for taking the time to talk to me and everyone else. And everyone should go to your website, addictedtoprofits.net, and we'll talk again soon.
Yeah, thanks. Yeah.